Welcome back. This is Project Invest. My name is Cal and this is Al, and today we're going to be looking at our portfolio. The reason we're doing that today is because we want to consolidate some of our positions, because I think right now with the current stocks that we're holding in this arrangement, we're not going to generate the type of returns that we want in 2021.
Yep, so before we begin, please subscribe to our channel, hit the bell notification, please like the video, your help is much appreciated. Yeah, so the reason why we had this thinking is because a lot of experts in the market are saying that, one of them being Cathie Woods, said that in 2021, there's a less likely of a chance that the market's gonna have those monstrous returns of 2020, right? So in 2020, basically, any decent tech firms that went IPO or is existing, they went up like 200, 300, 400%, right? And they don't see that happening in 2021, right? And we hold a lot of these new tech positions. And I think the question is, will these firms double up again or triple up again in 2021, right? And I think for a lot of them, our answer is no, right?
No. Yeah.
So we decided to close some positions, one of them being Lemonade. So Lemonade, a fantastic idea within the insurance space. We hold a small amount of shares. I think we got in at around $60. Now it's at 150.
Yeah.
That's 2.5 times our money. The business hasn't really taken off. It's just a really good idea at this point.
Yeah.
I don't think it can replicate the same results as this year, right? Because valuation is already sky high. And same with Square. Square is a really good business, but there's a lot of competition as well, right? PayPal is essentially doing similar things, right?
Yeah.
And they had a fantastic earnings just recently. So I mean, with the competition and also the rise of SoFi, right? Will they replicate the same results as last year? Right? Maybe a little bit tougher. So in conclusion, we decided to probably close out those positions for now. They're great companies, so we might go back in a little bit later.
But just to reiterate, also, we closed out Lemonade, but we didn't actually fully close out Square, because Square is kind of a two-pronged play, like just the app itself, right? But also the Bitcoin play, right? So that's the reason why we're still holding a bit of it, because there is some correlation with Square and the Bitcoin price. So this is kind of an indirect way of having exposure to Bitcoin. Is one of the reasons why we're still holding a bit of it. Another position that we have that we've kind of been looking at and deciding on what we want to do with it is Amazon. It's actually a pretty big, significant chunk of our portfolio. So if you look at the chart right now, we had a huge run up in 2020, and it's kind of just flatlined. It's been trading sideways at this point for some time now, and it's more or less going to be 50-50 whether it goes up or go down at this point. The reason why we want to still hold on to this is because a couple of developments that did happen. One of them was Jeff Bezos will be retiring, and they're bringing on Andy Jassy, who used to be the former CEO of Amazon Web Services. In the past, when CEOs left or were replaced, usually the stock takes a beating. But in this particular case, because it's Andy Jassy, and he has a huge track record of creating Amazon Web Services, which is probably the most profitable business sector for Amazon. A lot of people have a ton of confidence, and he's a little bit more friendlier, I guess, compared to Jeff Bezos. So this is one of the reasons why we're going to hold it. Because we see a lot of potential in Andy himself and how they're going to be, I guess, moving. It's kind of like how Tim Cook took over for Steve Jobs. This is the type of transition that we expect to happen. And number two is because of, like he said earlier, Cathie Wood saying that this year it might be a little more volatile, just because we had a huge run up. And I think having something like Amazon in your portfolio is a great way to head for that. So the proceeds from us selling these positions, such as Square and Lemonade, we're going to use these proceeds, and we're going to double down on Tesla, because we still think there's a tremendous amount of growth still available, and it's such a big stock now that's part of the S&P now that we're not too concerned about taking a massive hit. And even if it was, I think a lot of people would buy the dips. Another one that we want to bet on, that we think has the potential to 10x, because they didn't do anything in 2020 or wasn't even a public company last year, is IPOE, which is SoFi Finance. And that's another reason why that we dumped Square, because that's a very similar type of business, and we feel like there's more growth opportunity for IPOE.
I think all these four stocks we're talking about, Tesla, IPOE, Square, Lemonade, those are tech plays, right? Essentially, we're looking for 100%, 200% type of returns. And I think the question we asked ourselves is, look, going into 2021, which of these companies has the potential to give us that 100, 200%, right? Because it's unlikely that in 2021, all of these stocks will give us those returns. And we believe that Tesla and potentially IPOE would be able to deliver those returns in 2021.
Yeah, so again, because we're consolidating, that means our risk is going to increase. We're well aware of that, but we're not just like 100% gamblers. So we do have a lot of our portfolio in a very, very safe or very, I guess, risk-friendly stocks, such as our ETFs, the VTI and QQQ, and like I mentioned earlier in this video, Amazon. So these are kind of our backbone of our portfolio, so that when, let's say, according to Kathy Wood, there's going to be a drawdown in 2021, we're in a position where we can absorb that hit.
Right. So essentially, that's our strategy for 2021. We're extremely high on Tesla and IPOE. And Tesla, everyone knows about. For IPOE, if you want to know why we're so high on this stock, check out the video that we've done for IPOE below. Click the link to view it. And that's about it.
Yeah, that's it from us. See you guys in the next one.